JSE Safex style options, a great choice.
Welcome back to Wealth and Wisdom. With me is Natale Labia from Nedbank Capital on their debt capital market side. We're talking about the local bond market and some of the things we think could happen, play out over the next few years. So, Natale, how do you get involved in the bond market as a retail investor? Because I know these clip sizes and stuff that trade in millions of rand and it's not really open to smaller investors directly.
Absolutely. I mean, compared to the equity market, the South African debt capital market is much less liquid, and the volumes are smaller, and the trade sizes tend to be a lot larger. We're talking hundreds of millions of rands here. However, for the retail investor, your average saver investor on the street probably does already have quite a large exposure to the bond market. That's because all balanced funds, global funds, run by the major asset managers in South Africa do have between 30 to 60% exposure to fixed income assets. Okay. But that will be managed by the asset manager. Obviously, you know, and the retail investor will not have any say in how that is run.
So you could buy unit trusts that look at the sort of fixed income portion, or a balanced fund which mixes between the two.
And one mustn't forget that the single biggest investor in South Africa, sitting on just over R1 trillion, the PIC, has a mandate that 40% of its assets must be in fixed income. So you have 400 million rand invested there by one investor.
Okay, so they're quite a big player. Now, a fascinating thing I've sort of noticed and read about is that with an equity fund, if it gets really, really big, it tends to start having inferior returns because they get so big that they can't just pick out the winners. They tend to be closer to the whole broad market. With bond funds, that is not necessarily true. I mean, one of the best performing is the PIMCO bond fund, which is just enormous. I mean, it's the same as the BlackRock guys. They're huge, almost trillions of dollars, and they still manage to perform. What are the key differences there?
Well, the market size is enormous. So, I mean, PIMCO, there's no way that, I mean, given the size of PIMCO, that it could really influence bond markets. I mean, you look at just the US Treasury market is, upwards of $10 trillion. Wow. So, I mean, so PIMCO and BlackRock do not, they can't, even them can't really move markets. Okay. I think for fixed income investors, by and large, the fundamentals, the macroeconomic fundamentals are at the core of it. Equity investors will look at the fundamentals of a company, and they will try and find value in future earnings and try and price the equity, as accurately as they possibly can. However, when it comes to fixed income, the macroeconomic issues like inflation, like interest rates, that is really what drives prices.
Okay, so it's heavily driven by inflation and interest rates. And,
absolutely. And
these are issues. So what do you think is going to be driving the South African bond issuance and investing space in the next sort of 10, 20 years?
Okay, there are a couple of key themes. We spoke earlier about Basel III. That will really have a big influence on the bond market. As we said, the price of bank lending goes up. So you will start to see a lot more issuance. That should bring prices down. However, interest rates, South African bond yields are at 42-year lows in terms of the SA 10-year benchmark. This is profound. I mean, so the South African government can borrow more cheaply than they have been able to for 40 years.
Okay.
This could mean, obviously, that prices will go up. Another really important influence is inflation. Now, we've seen, I won't talk at length, but we've seen what the US government and the UK government and even the European Central Bank have seen happen to their economies. There could be a lot more inflation happening overseas. That could filter back into the South African market, which will drive interest rates up and bond prices down. So I'd say those are the sort of key trends.
So it's really low yields could lead to more issuance. Basel's going to lead to more issuance. So we think it's quite an interesting space that's going to grow. What about sort of more complicated products? I mean, the one thing I found quite interesting is ShopRite's done a convertible bond. Can you tell me a little bit about that?
Okay, the convertible bond space is interesting, and it's come off a very low base. We have seen a few deals being done more recently, whereby you get these kind of quasi-equity products that are released onto the market. The banks are ahead of that,
so it's kind
ahead
of
of
like,
the corporates in that space.
So it's kind of like a mixture of being a bond, where you get your interest payments on a regular basis, and being an option. So I mean, that's why
it
convertible
can convert
bonds
to an equity.
Okay,
Yeah.
so it can convert.
There are two issues with convertible bonds. Firstly is pricing. They're more tricky instruments to price accurately.
Absolutely.
I mean, a bond is very simple to price. You've got fixed payments until maturity, so you can easily get a summation of in terms of your rate of return, and you just discount that. However, with that conversion to equity, it does make it a bit more complicated. The second issue is that if you have a large issuance that suddenly converts to equity at some point, it will dilute equity holders.
Okay.
And a lot of companies are wary of that, especially if the shareholders are the directors of the business.
Okay. So then they're wary about that dilution. But it is an innovative way. I mean, what about sort of bond derivatives and stuff? Are you seeing growth in that? Do you think there's going to be more sort of options and futures traded in the bond market?
Quite possibly. But James, you must remember that the South African bond market is relatively immature.
Okay.
And by and large, this is a hold to maturity type market, where you get big institutional investors buying a bond and just sitting on it until it matures and getting their capital back. Okay. You don't really see the rapid trading and the volume.
So it's not high turnover.
No.
It kind of, people buy it, they say this is a great issue, it's a great company, I like the yield, I'm going to hang on to it.
And you must remember,
there's a shortage of good paper, let me just keep it.
And the kind of people buying it are the massive institutional investors.
PICs, who need to have it to match their liabilities. Yeah. Well, sadly, I think that's all we have time for. So thanks so much for being with us, Natale. So tonight we've learned a little bit about the debt capital markets and bond issuance in South Africa. Thanks very much for watching the show.
Wealth and Wisdom was brought to you by the Johannesburg Stock Exchange.